The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the May 19th magnificent Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. My outcome, as always, well, it's to help you to become a better money master and to provide you with tools that empower human potential. Because living up to our potential, folks, really, that's something you and I, we must master each and every day. So let's begin our day with empowering beliefs. Change your mind and change your life. And oftentimes, you and I, we underestimate the giant capacity that we can immediately command when we focus all of our resources on mastering a single area of our lives. And for those of us that don't achieve what we truly want, the main cause is that we never really direct our focus. We never concentrate our true power. It's as if we become a dabbler, never deciding to master anything in particular. And when it comes to trading and investing, dabbling just won't do. It's all about mastery, and that means immersion, and that means that we have to learn how to master time. You see, once we master time, we then realize that we overestimate what we can accomplish in a year, just as we underestimate what we can achieve in a decade. All you have to really do is look back at your life. At times, it might seem like maybe we're not making any progress, a time period where we get confused, but we must recognize that confusion means one thing and one thing only. It means we're about to learn something. So if maybe today, as I'm talking, if I'm talking about A to B equals CD patterns or descending price channels or whatever it might be, and there's some confusion out there, confusion means just one thing. It means you're about to learn something. Think of it like this. The seed gets planted into the ground, and on its way up, it hits the crust of the surface of the earth. Now, how easy do you think it is for that little seedling to bust through? Exactly. You see, most of these seedlings, they hit the crust, they get confused, and they never break through. They give up. But here's the key. Success comes from taking the initiative, from being persistent, and making sure that we express the depth of our conviction with every action that we take. And we must always remember this just before we are about to break through. Why? Because the universe is going to test us. The universe is going to test our conviction. It's going to test our persistence. It's going to say to us, show me just how bad you want this outcome. And that begs the most important question of the day for you and I. And it's this. What simple action could we take right now to produce a new momentum towards some area of success that we want in our life? This much I know to be true. The path to success, well, it's to take massive, determined action. There's no abiding success without commitment. If you want to be successful, find someone who's achieved the results you want and copy what they do. And guess what? You'll achieve the same results. It is that simple. The time is now, folks. The time is now to master anything that you want in life. Because mastery, as Tom likes to say, it's a beautiful thing out there. Remember this. Life is a mirror, and life will reflect back to us that which we think. I say, turn your mirrors into windows. That means look in the mirror, see the person you want to become. And I say become because each of us, we're always improving ourselves. And then take massive action, jump through that mirror, yes. Let's turn our mirrors into windows. It is Magnificent Monday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. We've got the Dow right now. It's trading off 23 points, whereas the S&P 500 up a point, Composite up 10, Russell 2000 lead the charges up $4.80. It's trading out at 11.07. Apple on the move this morning, up $7 and change. It's trading out at 604.92. Microsoft back to 26 cents. Google up $2. Netflix up $6.50. Jazz Pharmaceuticals up $5. Emerge Energy, EMES, Emergency Energy, I don't know. It's up 7%. That's what it's doing. Intermune Inc. up $4. CF Industries up $4. Zillow up 4. Google up 3. Ryanair Holdings up 3. Demandware up about $3 to the downside. Intercept Pharmaceuticals off $14, down 5%. AstraZeneca down $8 off 10%. Alliant Tech Systems, ATK, down 367, down 2.5%. Masonite International, DOOR, Door, off 4.5% out here. DirecTV off a couple of percent. Nordstrom's down 3%. Our call number, 877-927-6648. Folks, give us a call. Happy to take a look at your stock chart. Let's go take a look at the Dow. So the Dow is the weak link out here. Let's go see what the Dow is doing. We'll take a look at the futures contract. It's going to be the easiest way for me to kind of get a grip on what the Dow is doing here. We'll take a look at swing points. So the Dow is still trading inside that last down thrusting candle session from 12 noon. This is the 120-minute chart, by the way, that we are looking at on my screen out here. That was May 15th. That candle session went from a high of 16,488 down to a low of 16,378. That's not the actual swing point. The swing point took place on the next little doji session out there at 2 o'clock in the afternoon. Again, a 2-hour chart that we're looking at. The Dow needs to clear, so its resistance area, we can clearly see that, happens to be the high of that candle session, is that 16,488. The Dow made it up to that level back at about 8 p.m. last evening. Got up to what? 16,488. Went ahead and gave it up on price. Hasn't busted through the bottom, so we can see just a little bit of a consolidation going on inside of it. So that's what's going on here. So with the Dow trading lower, does it mean anything as we speak here this morning? Well, it's just a weak link out here. But until it really busts through that level, that's this little this candle here. It's not really giving you much of a signal. It's not giving me much of a signal. Maybe giving you something, but it's not giving me much of a signal out here. And what it's really been doing is moving sideways. Well, I guess the signal could be, hey, it's moving sideways to work off an extreme oversold condition. That it is. It most certainly is. The question is it just going to coil up like a rattlesnake just to go ahead and strike and make its next move down? And you might say, well, where would that next move down take you to? And that's an excellent question. Well, if it can't take out the high of that candle, the next move down, the one-to-one, takes you to about 16,161 out there. That is the 120-minute chart for the Dow. Now, let's go take a look at our TAS signal box market profile system out here. So let's take a look at some volume dynamics of the Dow futures. Let's take a look at it on multiple time frames out here. That 16,488, I think, was the number. If you take a look, what's interesting here, if you take a look at the 240-minute contract, so Stevie was just taking a look at a 120-minute chart out here. So we're just upping it here by one. We're doubling that. What's interesting here about the 240-minute chart is that same price area. In this case here, it's 16,467. I think we were up about another, 11 points or so, 21 points. I guess that would be 88, yeah. If that was the number, I can't even remember, quite frankly. I'm going to let you do that work out there. But what's interesting here is right now it's just bouncing in between a level of support and resistance. Support 16,391 until it breaks through that on a 4-hour basis. That actually just adds as support. Whereas if it breaks above 16,467, that offers with it the promise for higher price. Well, I'd have to say, and I'll go back and take a look at retracements, but 16,637. So we gave you really two options here with regard to what the Dow may want to do, depending on the type of trading style that time frames that you trade on. Really, I'm giving you both sides of a trade. You're just waiting for a conviction. You're just waiting for a conviction as to it telling you which way it wants to go. But before we go back to the other charts out there, and we try to take a look at patterns, let's look at what the Dow futures are doing on their daily chart. Their daily chart, I'm going to go ahead and pull this back a bit. The lime green line out here, the one that here, let me get my cursor. I need to do this. I remember because I was making copies of different charts here for subscribers this morning. So give me a moment here just to get my cursor going here. I do not want it visible. I want it always visible. And let's show the cursor. There we go. Okay, so now we're back up and running. So since the trading session of May 15th out here, May 14th, I should say. We've got a new little market profile that has established itself. That says support 16,421. And as long as on the daily basis, the Dow futures hold that level, that offers with the promise to maybe travel with inside this consolidation, maybe even get up as high as 16,616. The promise of that won't come until you see the promise of a close above the level we were looking at inside the 240-minute chart out here. And if we take a look at the weekly chart, we're going to see the weekly chart says, hey, you've got real resistance right up here at the price level of 16,473. Last week, price in essence closed almost right on that level. Last week's close was, where is it, 16,465. Yeah, I'd have to say it closed really right on that level out there. So that's what's going on as we take a look at the weakest index here at the moment, and that is coming from the Dow. And even though it's the weakest, it's really not showing like it's broken down totally here yet. We know the areas to be paying attention to for that. So that's what's going on there. Let's take a look at the Nasdaq. I think I might have done this with the Russell, at least on the 240-minute chart during the last show out here. Let's go take a look at what's going on inside the NQ, and let's take a look at different time frames out here. Let's take a look at the 240-minute chart here. 240-minute chart right now up above what's called that unfair high, that resistance level, 35.7613. That means if you were trading based on a 240-minute chart or some time frame close to that, you might not want to be short here, because this is giving you the promise and the message of being long, which it did back at 12 noon on Friday at May 16th. And it did that as price broke above that 35.76 level. All prices really done here over the course of the last, for a 12 hours is just really test that area of resistance, and it has rejected that each and every time on a closing basis. So that's the message of the 4-hour chart out here. If we take a look at the daily chart is just kind of trying to make its way up to its real resistance area right around 36.2365. That may be the area where one would want to take a look at going ahead and taking a short, or if you're short, you'd want to have your stop probably above that level there, not like at 36.2450, but somewhere further above that. You got to give it some kind of room out there. That's what the daily chart for the NQ is showing. The point of control on the weekly chart, 3601.85. That's just simply a area. It's kind of like a Starbucks where everybody likes to hang out. Of course, I don't qualify for that category because I can't tell you the last time I had a cup of coffee. Now, a coffee candy, that could be a different thing. And I grew up in Detroit, and in Detroit there was a little drug called Saunders out there. They still make, I think somebody bought that company out, and they made the best hard coffee candies on the planet. And I as a kid in high school, in college, there was a year there where I was working a midnight shift, taking courses during the day. You want to talk about? I talked about being confused during the first hour. When I woke up, I didn't know what time of day it was. That was a heck of a life. Working a midnight shift to put myself through college. Off of after getting off of that midnight shift, having to go to school and then go to sleep and wake back up. Just to start things over again at 8 or 9 o'clock at night. In any event, 877-927-6648. You can give me your call. We can talk about how coffee and your midnight shift experiences. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow is off 6, S&P's up about 3, Composites up 18, Russell 2000 is up 8 points. Yeah, it was, I don't know, 35 years ago or so. Back I was in college, and, I put myself through school. I moved away from home. I was still 17 years old, but I graduated high school, kind of like just barely. And not grade-wise. That was a whole different situation. But in any event, I worked for a guy that was in the T-shirt business, silk screening T-shirts, and I had done that during the summertime. And we landed a couple of large deals, so there was an opportunity for me we had to operate 24 hours a day. A couple of those large deals. There was a company back that's still around, right? Kmart, yeah, I think he's still C stores. They're headquartered up in Troy, Michigan, in the Detroit area. So we got contracts with them for different occasions, Mother's Day, Father's Day, holidays out there. And, I mean, they bought just simply tons of shirts from us. Then I went ahead and got us involved with back then, if you've ever been to concerts, now you go to concerts and it's not uncommon for the groups to be selling T-shirts and stuff like that. Back then, it wasn't that common. And so there's a outdoor music facility called Pine Knob. It's quite a ways north of Detroit area, but a great outdoor facility out there. And through a connection with the radio station, think it's called WWW. I don't know if they're still around. I imagine that they are. Through contact there, and they were able to, through Pine Knob, they were able to get us in contact with the different bands, and we just proposed to them being able to, sell their T-shirts at the concert so that they didn't have to even worry about, for those that did carry them, they didn't have to do that out there. So that kept us pretty busy out there, but I do remember that working that midnight shift, that graveyard shift, as Al Berto here reminded me, that was talk about confusion, because you would come home from school. I came home from school, who knows, maybe it was like 12 noon or something. You'd have to eat dinner, supposedly, and then go to sleep. And it was late outside. Now, I was living in Detroit. It wasn't like I had air conditioning or anything in the place where I was living back then. So as you can imagine, in the daytime, and if it's summertime or what have you, it can get pretty hot and humid up there. Trying to fall asleep, that's a whole nother thing. So I was glad to have not done that midnight shift for too long. In any event, you really didn't listen, and you're not here to hear about all of my past, but nonetheless, I got control of the airwaves, so you're going to get it. If we take a look at the euro, Japanese yen out here, what I did a couple trading sessions ago, create a little Gartley buy pattern while it's moving into the oversold condition out here. We've got to watch for a bounce inside of the euro Japanese yen out here. So it's made a nice little Gartley pattern. It's not giving us any kind of reversal signal here. It's kind of like on the precipice of wanting to tip over, and that tip over would take it down to about 137.84 out here. If we take a look at what it's been doing, though, on the intraday charts, we're going to see that it's making lower lows with less relative weakness out here. That's always a sign that price wants to go ahead and pop to the upside out here. That is right down here. That is the also made on the intraday chart, the 2-hour chart, made a little 3 drive to a bottom pattern out here at the trading session about 7 o'clock this morning, and I was doing it with less relative strength. So as I mentioned to you, I think I was long. My clients and I, we were long. We closed out our long position inside of the NASDAQ before the market made its turn south. I did not get in on the short side there because I didn't have the conviction. I wasn't getting the signals. I had a couple signals that inside the Euro-Japanese yen, but I didn't take that trade, and now the question is, where do we get in? Because I do believe in taking a look at the SPY, the diamonds, and the NASDAQ. We have some real easy targets of where to not go short, as well as the current message, and the current message, in my opinion, is to be short, is to be looking for places to short. If you're not short, the question is always, where is it that you jump in out there? And that is the key to being able to take a look at patterns and just other elements of the market. It was like I had in my newsletter this morning and on Friday. Hey, it's just a matter of identifying the spot where we want to, but now is not the time. Now, that's of course, I'm writing that when futures were down this morning. At one point it was down 70 points inside of the Dow out there. So, and at this stage here, we'll see. Right now it's proving itself to be the case, but a lot of time left in the trading session. It's 10:29. Things can change at 10:30 out here, but we'll go with what it is that we've got right now, which is the Dow off 7 points. But we know in taking a look at it during that first break, it's really up against some support areas on the daily chart, and there's a resistance zone that it's trying to break through. We get back. Let's go take a look at the Russell 2000 here. It's breaking out above a resistance zone and doing it with a nice wide-ranging bar. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's still the week indice out here right now. It's off 14 points. S&P is up 2. Composite up 17. Russell is up 8 points now. On the, I've got the futures contract up on my screen here. It looks like it's headed for that 11.16-ish area out there. It basically forms about a 0.618 retracement in that range. It also would be a 2.618 expansion of its B to C swing point out here of the A to B equals C to the upside. That's the high from 9:30 this 9:30 Friday morning. That is at 1096.70 down to the low at 11:30, and that was out at 1084.70. Nice wide-ranging bar as it's coming through. And the last time it had a wide-ranging bar, right back here as it broke through this descending price channel. That was at 11:30 in the morning on May the 12th. This is the descending price channel inside the Russell 2000 Index futures out here. It's a pretty good price channel. Last time that it got above that area, it came back. And so I would be looking. It's still kind of a potentially weak area. We'll see. We have to watch what happens as price gets to that area. Just because it gets there doesn't mean it's going to stop. That looks like its next target area. And as price gets there, we'll have to just simply watch the formation of the candles. If we switch back over and take a look at the IWM out here, right now it's trading above the 50-day exponential moving average, which is priced out at 109.87. If it can close above that, it offers the promise to move all the way back up to its most recent swing point, which was May 12th out here. That high is 113.04, and the 200-day exponential moving average is at 112.74. That is likely the target area where the IWM would release its next piece of information if it can maintain the strength that is inside it. And strength, I'm just really talking about price-wise. Volume-wise, 11 million shares so far in the first hour of trading. It's going against 65 million shares to the downside. So we know that volume is stacked early on and late in the day. So even if you multiply, it's hard to believe that it's really doing 65 million shares if you were to multiply times 6.5. So I don't think that is really the key. But, however, the IWM, what it needs to do today, volume or not, is just simply close inside the low of May 12th. That is at 110.51. And if it closes inside there, and that's got 76 million shares, that's the swing point, that offers the promise to at least go test the high of that level. And it's really the IWM that we want to pay close attention to. If we go take a look at the other ETF structures out here, let's look at the SPYs, see what they're doing. Of course, the SPYs forming that island reversal top out here, not until the high was taken out for May 13th, 190.42. Can one get overly exuberant about being long the SPY out here? So far today, bounce higher on light volume, 19 million shares going into that downdraft of 154 million shares. There's where you can see light volume, because you can take that multiplied times 9.5 and 9.6.5, and you're not even close to that down thrusting volume from May 15th. So a little bit of weakness here inside of the SPY. Maybe we're going to get everything moving to one direction with gusto as soon as the NASDAQ and as soon as the Russell are done with their counter-trend rally. The diamonds here, much like, they're struggling. They're not doing anything. They're just really trading sideways out here. And, of course, the diamonds has its own island top reversal pattern. It needs to take out 167.29 in order to say, hey, one of the more bearish patterns out there, the heck with you, I'm taking off topside. The Qs, on the other hand, the Qs here have formed a couple of several what I call high volume lows. You always have to pay attention to the lows inside of the Qs here. They've made 1, 2, 3, really 4 or 4 and 5 successive higher lows with high volume. That, unfortunately, for the bears is more bullish than it is bearish, unlike you might think out there. And that is because of the unusual characteristic of volume as it applies to the Qs out there. And what does that mean? That means that the Qs can still move up to $90, where it would form a nice little Gartley sell pattern out there. That is what's going on inside of that ETF structure. Volume-wise, this morning, we're taking a look at 9 million shares thus far, going into a swing point out here from May 13th. That's got 30 million shares. So it's moving into a swing point inside the Qs here with volume. Let's take a look at, did we cover everything? Got the Qs, SPYs? Yeah, got all that. Let's go take a look at, what do we want to take a look at? Let's go look at the euro. Let's take a look at some currencies out here. We looked at the euro, Japanese yen, but let's go take a look at the euro in U.S. dollar terms out here. On the daily chart, the euro, we're seeing a little bit of bullish action here this morning. Candlestick-wise, a little bullish engulfing candle. We'll see how it responds. The key level to be watching is going to be the channel line. That's the red diagonal line on my screen here. Prices come back into its trend line. So it's testing that area one more time out here. But if it breaks down below the red line, the channel line out there, the move to the upside, the breakout will have been for naught out there. So we'll see what happens inside the euro. Any trades out here, we'd have to look at the shorter-term charts out here. If we look at the euro U.S. dollar on the 30-minute chart, let's go see what it is doing out here. As it was making a low, was there any pattern down there that we could have seen? I don't know if this, let's see if there's a potential 3 drive here, I suppose. Let's take a look at that. I don't know time-wise. And so there's, let's go take a look at now cycle-wise. The whole thing is you can't really force these patterns. They need to, yeah, that actually works. How about that? I mean, it's off by 1 or 2 candles out here. So that's kind of interesting as we take a look at the euro. The bounce here has been pretty tepid. If the bounce continues in the euro, what we ought to see is a price move up to about, your A point is going to be the low at 9 a.m. on May the 15th out at a price level of 136.47. Your B point coming in here on this little straight line move, 11:30 in the morning on May the 15th. Your C point would be all the way down here, 7 a.m., May 16th. That says that the euro could easily get up to 137.68 as its next move. It just needs to take out the B point, which is the 11:30 a.m. high on May the 15th, 1.3731. Thus far, it has not been able to take it out. Let's take a look at the Great British Pound. Let's go back, take a look at the daily chart, though, see what's going on with this currency pair. This is broken out of a long-term consolidation, and so far the pullback. This is the weekly chart. It's a beauty of a chart out here. Let's take a, long trades are what somebody should be looking for when they're taking a look at the Great British Pound, in my opinion. We did get a little bit of a reversal signal. Weekly chart is what we're looking at here, May 9th out here. A little shooting star up towards resistance and a little bit of follow-through last week. Let me put this on the daily chart. Let's put this on the daily chart and hope that I do not lose that weekly information because I don't have to rebuild anything. So no pattern other than just a solid retracement on the daily chart between swing points, and that was talk about an exact 0.786 retracement off of its swing point that I grabbed down here from April 15th. That low, 1.6656, all the way up to the high out here, wide-ranging bar on May 6th as it got up to 1.6996. The 0.786 retracement, let's see how close it was. 1.672 is the 1.6729 is a 0.786. It got to 1.6730. You got to love Leonardo Fibonacci. Man, oh, man. Let's take a look at Goldilocks and silver, see what we have going on inside the metals market out here. Right now you've got gold is trading up just slightly, about $6, trading out to $12.99. I am going to get rid of that trend line. I do not like it anymore. We had gold break through that, but it has not taken off. It's just continuing to travel sideways out here. Now that is it's not exactly the most bullish thing by doing that, but what we do know about gold is it has rejected swing point low from the B point of a potential A to B equals CD to the downside. That's the April 1st area, 1277.40. Each time down there, the bulls have rushed in and saved the day. So it was not the third time that was the charm. We'll see if price ever does get below 1277.40. What you're looking at, you really have the you got two A to B equals CD patterns here. I can't tell you which one it's going to do. Is it going to form the one to the downside, takes you to 1216 or 1184, or is gold going to form the one to the upside here? And the upside pattern says that what gold could do would be to move up to the price level of 1480. 1480. So how are we going to know whether or not it does it? I would say your first clue is going to be gold getting above the April 14th swing point high of 1331.40. If you can get above 1331.40, that would at least give us the inclination that price ought to get up back and test the March 17th level out at 1392, and that's what I would be looking at inside of Goldilocks. We take a look here at silver. Silver, so you got two different potential A to B equals CD patterns inside of gold. Inside silver, how will we know if silver's going to break? Well, what's interesting is the red diagonal line on my chart out here inside silver. This is the daily chart we're looking at. This is a continuous contract, and that is the descending price channel, which price has been maintained and contained within it. Today it was trying to break out above that level. I'll blow it up on my screen out here. It was trying to blow up. It was trying to trade above that level. Failed to do so thus far. The high today, 1968. A close above 1968 would be nice. What it really needs to do is get above the 50-day exponential moving average, $19.79, and more likely what it really needs to do is get above the B point, which is a May 14th swing. That's at $20 even Steven out there, and that could then set up an A to B equals CD to the upside. However, silver really does have to get outside of this June 28, 2013 swing point out here, that key reversal session, and so it needs to close above 1963, and it has been unable to do that out here, and that's what silver is doing. Let's take a look at light sweet crude. Light sweet crude, well, right now it looks like it has maybe made that 0.786 Gartley sell pattern out here. Let's take a look at it. That's coming off of that doji swing point from April 16th. Let's see, did price get up there? Well, it could be forming more than that. Well, it did form the 0.786 Gartley sell. 103.11-ish is the price target. Well, let's take a look at what the actual 0.786 retracement level is. 102.95 would be the exact number out here. However, what you'd want to see is you'd want to now see light sweet crude sell off and get back below that little rising price channel out here. Because if it doesn't do that, well, could run all the way up and is trading inside the swing point. That doji from April 16th, 138,000 contracts. You're up there with 39,000 contracts so far. Is this the right contract? June? I think that it is. So, anyways, that's what's going on here with light sweet crude. Sorry about that little pause in thinking. If light sweet crude closes inside of 102.43 or 102.82, that's more bullish than bearish out here. If we take a look at the 30-year Treasury, let's peek in and see what the 30-year Treasury is doing. Breaking that bearish rising wedge, not really caring. We are not seeing any kind of reversal signal here yet inside of the 30-year Treasury. Looks like an A to B equals CD may have completed. Let's take a look at that. The A point would be down here. I would use the low from April 22nd. And as a B point out here, boy, you'd almost have to use the same candle. You do have to use the same candle. So it has completed a 1-to-1 A to B equals CD. That also may be a little Gartley pattern out here. Let's take a look at it. Nah, it doesn't really, well, I didn't really grab the right swing points out here. Let me see if I can do that. We'll try it one more time. There we go. Yeah, not really a pretty butterfly out there. And that's in the 30-year Treasury. Let's take a look at some stocks here that are popping and dropping this morning. Let's go take a look at LifeLock. Let's go see what LifeLock is doing. It's locking itself up by moving down a total of 16% right now. The ticker symbol here is LOCK. Let's go see if we can pick the combination. Oh, this does not look good at all. So LifeLock, let me go ahead and start with a clean chart. LifeLock out here had some volume off of its highs. Let me pull this back, make sure. Yeah, all-time highs. So this makes a high trading session of February 14th, and then you get volume off of those highs back on February 24th, 4.7 million shares. Very first sign of institutional selling. Price was coming back into an area now. Volume-wise there was 4.6 million shares, and it was coming back into, I had a long way to go to come back into a most recent sign of strength out here, and price was not able to be contained with inside there. 4.2 million shares, a breakout session on October 30th. And we can see as price came right back into that breakout area, way too much volume. 6.5 million shares out there. So now we've got LifeLock coming all the way back. It is unlocking the door. It's coming all the way back to its lows, maybe about $6.90 or so, back to the October 24th, 2012 area. That's what's going on inside of LifeLock. Let's take a look at, there were some stocks out here that had some potentials for some islands out here, island reversal, and they're really on our watch list. So you got RAX out here. RAX is the ticker symbol. Today, and this thing had gapped up. Big volume inside this equity on May the 16th. Maybe some short covering going on there. I don't know. But what we're watching for is for RAX and see if this tomorrow we'll have to check back in on it. Will this thing a gap below 35.40 and create a little bit of an island reversal out there, just like the SPYs, the Diamonds, the New York Stock Exchange? All have those island reversal patterns, a message of bearishness. 877-927-6648. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 11. S&P is up 2. Composite up 23. Russell 2000 is up 8. And I see here during the break that Elvis is back in the building. That is great news for all of you TFNN listeners. That's Elvis Pesavento back in the driver's seat out here. So he's been spotted in the Tiger's Den. He's going to be with us today. Our lineup today, following this show, we got Basil Chapman. Then we go out to Larry Pesavento, Daryl Martin, David White, and then the Tom O'Brien Show from 4 to 6. So good to have Larry Elvis, that's his middle name, Pesavento, back with us. Of course, I'm not sure. I know that's not his middle name, but it is now. So what are we going to be looking at today? What do you want to keep your eye on? Number one, in the ES Mini, maintaining the 1876.25 level, staying above that, offers the promise of price moving up to about 1884 to 1888, 1889. That is what my expectation is that we will see unfold. But that is just really setting up the next short inside of the marketplace out there. At least that's where things are as we speak right now. Inside the New York Stock Exchange, again, the NYSE, I don't know that we took a look at it or not here today. Of course, we've done this on on many of the occasions. We've been doing it since Thursday. That island top reversal, that is real key. We're not seeing much of the New York Stock Exchange, so that is telling us something. That is very much telling us something here. Our expectation, the New York Stock Exchange is likely going to trade down to about the 10,100-ish type level, maybe even get down to the bottom of its rising price channel in about the 9,600-ish, 9,700 area. So you got that big old island top reversal. In order for the bulls to take charge of the New York Stock Exchange and let us see what they can do with it, you'd need to see net advancing issues today greater than, what is it? I think it's 1,075 or something like that. Right now, it's like net advancing issues, 705 out there. So the NYSE, we take a look at price action out here. This is communicating a lot to us, and that we're seeing a nice little counter trend rally inside of the market here. If we take a look at the VIX index, one of our liquidity indicators, there's two of them out there. The VIX index here, still below the 50-day exponential moving average. That's enough for the market to get some legs and extend this little counter trend rally that is unfolding as we speak. If we see the VIX get above that 50-day exponential moving average, 1378, you can rest assured the counter trend rally will in fact be over. And that's the number to be watching there, 1378, as we speak today. And inside the other liquidity indicator out here, that's the euro, Japanese yen. Again, the daily chart showing a potential 0.618 Gartley buy pattern. Nice Fibonacci numbers here, 1.272 expansion of the B to C swing point out here, and a 0.618 retracement. However, if price closes much lower than where we're at right now, we're at 138.81. It gets below 138.60 out here. What we're likely to see is a B line down to about 137.84, and that will set up a 0.786 Gartley buy. And if price stalls there, moves sideways, which could very easily do, and then fails, well, then the euro, Japanese yen, will be getting some butterflies in its stomach because it will likely turn into a butterfly pattern, and then we will see all holy heck break loose in the markets here, because this currency pair, this is the carry trade. This is the currency pair that likes to do the tango with the U.S. stock markets out here. So, folks, it's been great to be with you. It is Magnificent Monday. Even more marvelous that our man Larry Pesavento will be back with us, but not until Basil Chapman does the warm-up show for him. Have a great Monday, folks. I look forward to seeing you bright and early tomorrow morning. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.